Today, let's meet our guest speakers. First, we have Kaylee Lieffers. Kaylee is the co-founder and CEO of Blanka, a platform designed to help entrepreneurs launch and scale beauty and wellness brands. She created Blanka after experiencing firsthand the challenges of building her own beauty line and navigating the complexities of scaling a startup. She is also a proud past Technology Impact Awards Startup of the Year winner and graciously sits on the BC Tech board. It's lovely to see you, Kaylee. Next on the panel, we have Jonathan Martin. Jonathan is the CFO at Hiive and is the architect of its financial infrastructure, including a settlement operations function that processed over $1 billion in transaction volume in its first year. A trusted strategic partner to Hiive's leadership, he has built the reporting structures and internal controls that's allowed one of the fastest growing private markets platforms to scale with institutional grade reliability. Really lovely to have you here, Jonathan. Also joining us, we have Bruce Key. As a founder and CEO of Launchpad Technologies, Bruce has over 15 years of leadership experience in the technology sector and also graciously volunteers his time as a BC Tech board member. Launchpad is a software integration and automation company that helps clients achieve digital transformation by connecting systems and streamlining data and workflows. Great to see you, Bruce. And last on our panel, we have Don Murray. Don is co-founder and CEO of Safe Software, which he launched in 1993 and has grown into a global leader in data integration. Under his leadership, the company's flagship product, FME, has become an industry standard used by organizations around the world. Today, Safe Software serves over 25,000 customers across 125 countries, reflecting those decades of disciplined growth and innovation with his team. So great to have you here, Don. So thrilled to have this amazing panel with us today. So let's dive in. For our audience, I'll just note for you, we'll have some time at the end for Q&A. So if you have any questions, just put them into the Q&A section. We'll do our best to get to as many as we can near the end of the session. So let's start off. I'd love to hear from each of you a bit about how you've approached funding your growth. Maybe you can reflect on how folks can determine whether they need external capital versus growing through revenue and discipline, which we heard a little bit from the audience about in the polls. So Kaylee, I'll come over to you first.
Yeah, thanks, Erica. Hey, everybody. Exciting to be here today. Thanks for having me. I guess to paint a bit of a picture about, our funding journey, I think it's safe to say we're probably the earliest stage company on this panel. So just to frame that, we started the company in 2021 and bootstrapped for 2 years. And then in 2023, we ended up raising a round in the US instead of in Canada. So we raised $2 million seed round in 23, and then we were preempted with an additional 1 million. Most people actually don't know that, but it's not secret. I just haven't shared it. So in total, we've raised about 3 million USD. In terms of kind of like the determining when we needed that external capital, at the time, it was very clear where we were starting to hit ceilings and we needed capital for more growth. And so our decision was really based on wanting to go further faster. And, making that decision at the time really made sense for us. I think a really important question you have to ask before you raise is like, do you have product market fit, or are you close to that? Because you don't want to bring on capital if you don't know exactly how you're going to deploy that capital. Full transparency, our definition of what our product market fit has shifted since we've raised. It's actually shifted really significantly. But at the time it made sense for us. However, I've seen companies that just raise without knowing exactly how they're going to deploy. And I think that that's a really big mistake. One thing I will kind of flag though, is that once you do raise, depending on who your investors are, there is, that pressure to deploy your capital quickly and maybe not protecting your runway as much. And so that's actually probably something I would want to go back and tell myself even more. I thought we were protecting our capital really well. And there's a lot of decisions I made because I felt pressured to do so. And so it's not just about, the decision to bring on capital. It's a lot of external pressures that you're going to have that come with that capital. Things seem fine and dandy when you're raising and everyone's super excited. But the big question is like, hey, when there are challenges, when there's tariffs, when, there's a global catastrophe, like how does your board and how does your team kind of support you with that? But happy to dig into that a little bit more. But that's kind of what drove our decision to raise capital in the first place.
Yeah, so as Safe Software, we've been in the lucky position. We've never taken on capital. We've been, I live on emojis, and so we've been able to fund the whole thing from revenue growth. Now there is a trade-off, of course, because then you really have to watch, and you can't hire maybe as quickly as you can. And I would say, looking back, one of the things that I wish I had done is hired some key people sooner, and people who didn't match the skill set of the two founders. It was Dale and I, and very technical people. We could get it going, and then but we were reluctant to divert funds to marketing and true salespeople. And we just kept pouring the money back into the product, which meant our growth was around 10 to 12% a year. We were always profitable. We never had to lay off people, but and now that's changed. Dale is no longer with the company. He sold to JMI, and so now I have a new partner. JMI did not put equity into the company. They simply bought Dale's equity. But now, as Kaylee said, talking about pressure, there's very different. They're an investor. They obviously love the company, but they also want growth because they're investing other people's money. And so it's exciting, but definitely there's pressure to make changes, sooner rather than later. So, yeah.
Don, thank you so much for that. Maybe I'll pass it over to you, Bruce. I know that you've been bootstrapped from the beginning. Would love to hear more about your approach, and a bit of your perspective on when you make those type of decisions.
Awesome. Sounds good. Yeah. At Launchpad, we took a bit of a unique detour. So everything that Kaylee just mentioned, I had some very close encounters, experiences in the previous companies that I either founded or worked at, having dealt with all kinds of VCs and PEs. In 2018, when I founded Launchpad, one of my theses was to see how far we can go with $500 as a starting funding seed. Obviously, that's a bit of a stretch. What we have done is, prior to funding the company, we had a pretty close look at an opportunity at the integration market. So we already knew very well about our product market fit. So right out of the gate, we leveraged a lot of our services to generate our initial revenue right out of the gate. We then decided to reinvest that revenue right away into our product development, and we never looked back since. The product has started to grow, and the revenue started growing. It was always a very interesting and intricate balance between how fast you can scale from a product perspective, and then the revenue growth perspective. I would say, looking back from 2018 to 2020, those 2 to 3 years, initial kind of startup stage, we could have gone faster if we did say yes to a lot of the offers from VCs and from PE firms that were knocking on our door. But two things that were really core to our company's mission and core values. One was the people first. And I know that sounds like there's a lot of companies says we're a people first company, et cetera, et cetera. But in my previous life prior to Launchpad, having dealt with those, what Kaylee and Don mentioned, the external pressures from funds, there are a lot of trade-offs and balancing acts from a management perspective you need to consider. At the end of the day, the expectations of investments always trumps certain decisions that you need to make for your people. For instance, uh, we had a client that would have brought in our early stages quite sizable revenue uplift, but if I mention who shall remain very anonymous, if I mentioned, everyone would know, and it was tag associated with a fairly large scandal that's out there. But we decided to walk away from the opportunity from an early stage company walking away from a revenue. That would have been pretty unthinkable. But those are the decisions that we had to make. So as we progressed along, there's more and more opportunities for VCs and PEs that knocks on our door. And frankly, I think looking back, we made the right decision not to take them, uh, because we were able to very much reinvest our portions of our profitability back into product growth and people growth. It was a very balanced way of growth, I would say, and I'm quite happy with how things have turned out. But that's not to say, once again, at a certain stage when you're scaling and maybe reaching the anchor stage in the near future, hopefully you have to access funds, and we can dive deeper into that in probably uh, other questions if it comes up.
That's great. Thank you, Bruce. Jonathan, happy to have a CFO in the group here. Would love to get your perspective on this and a bit more about Hiive's journey.
Yeah, happy to speak to it. Yeah, maybe I have a different perspective in capital allocation, though probably not too dissimilar based on what I've heard, which is great. Um, and so Hive was bootstrapped for the first year and a half. Actually, we started the company. The founder started the company in 2021, and then became cash flow positive at the end of 2022, kind of going into 2023. We waited, like Kaylee mentioned, for product market fit before we figured out exactly where we wanted to invest. And one of the things that we've been trying to do is to centralize the private marketplace for private stock. And we needed to make sure that we had the right product strategy. We need to make sure that we had the right go-to-market strategy. And that was proven to be true once we launched the market in midway through 2022. And so we saw a huge opportunity ahead of us, ran a Series A in August of 2023 to increase the capitalization of the company, to be able to double down on the product investment that we knew would be impactful, though you're always taking a bit of a gamble when you're making new product decisions. And so it's really difficult to exactly think about how to allocate that capital, but it is important to test those assumptions as you go. Make sure that, like Kaylee mentioned, I'm calling back to Kaylee's advice because it was really good. Making sure that when you're making those bets that you have some data to back it up. And then once you get those signals that you're looking for, double down on those investments. I know there's a lot of different things that we're going to talk about with respect to balancing growth and discipline, and chasing squirrels, as we call it here. And so it's important to know exactly where you want to invest and on what thesis you're making that investment.
That's great. That's a great segue into our next discussion point. Thank you, Jonathan. So yeah, thinking back to the poll earlier, we asked folks about those constraints that companies may be facing today. They kind of highlighted finding and closing customers, so getting revenue in the door and access to capital or financing. So when times are tight or resources are limited, how do you decide where to place those bets, and what signals are you folks looking for to unlock where you can unlock growth opportunities? Maybe we can dive a bit deeper on that. So Bruce, I'll come over to you first on this one.
Absolutely. Just to reaffirm the two poll results, I think the first one, the highest poll answer was finding customers and closing opportunities, and the second one is to focus on revenue and profitability. Correct? I would tend to agree. I think, at least from Launchpad's perspective, the first one, finding customer has not been a issue. Is the closing part of it. I think the market has taken a very different approach in purchasing their systems, their softwares, and their decisions. I think AI is probably the big elephant in the room here. There are no CTOs that's out there right now without an AI initiative. So But I think we're at a stage where just kind of stepped over the precipice of actually understanding what AI could do for individual work productivity, but as an enterprise and organization wide CTO level, I think a lot of this is my personal opinion and from observations and talking to many customers. There's still a lot of formulation coming through, but while this is happening, I think the decision making and closing this deal. So when as vendors we're selling into these organizations, we are seeing a lot of delays in our sales pipelines. Our sales pipeline is very healthy in terms of size, but at the bottom of that sales funnel, we're seeing that there's a long delays, decision making processes, going back for reviews by their board, etc. So I think from that perspective, in terms of funding and where you invest internally, we have taken a very conservative effort to kind of stands to say, yes, we're always reinvesting our profit into our product development. So that has been a lot more protective from Launchpad's perspective, and also looking for the signals. Where we are seeing is supporting the underlying structures of how AI can succeed in organization. And we're actually seeing a new revenue stream for Launchpad's integration platform because all of a sudden, just out of nowhere, one of our kind of customers said, "Hey, by the way, we're using integration platform Passport from Launchpad for a long time now, but our new initiative is to bolt all these AI tools on top of our systems. And we've got all these data that's being managed and integrated and automated from Launchpad. Can you please, become our AI supply layer, sitting right in the middle with all these legacy data sources and all the ERPs and CRMs systems?" So it's a great. So I think that was a great signal for us about 6 to 8 months ago. And we're doubling down on that. And we're seeing a lot of success on that right now. So there's a there's a challenge in the market, and then the opportunity in some ways, really understanding what is the strength of your product and your offering and your value proposition, and building on top of that. I'll pause there. I'm sure the rest of the panel here have a lot a lot more to talk about.
Yeah, thanks, Bruce. And yeah, I think we'll deep dive into AI definitely on our next question because certainly that's a backdrop all companies are dealing with. And I appreciate you kind of framing that, some of the challenges and then the big opportunity at hand, right? So maybe Jonathan will come over to you, kind of thinking about constraints or when resources are limited and how to decide where you place those bets. Maybe we can get your perspective.
Yeah, I think the key question is, what are you trying to optimize for? If you're trying to get to a funding milestone, are you trying to ship a product? Are you trying to show a certain revenue growth rate? Are you trying to show a certain number of customers? And where you allocate your resources should be aligned with what that goal is. And so I would say if you don't exactly know where that goal is going to be, a good safe harbor is to always invest in your revenue engine. And it's because there's a lot of problems that come up in a company that can be solved in other ways. But it's really difficult to solve a revenue engine problem if you're trying to extend your runway, if you're trying to show that growth story, if you're trying to go into a funding round. And so, it's the classic answer of optimize around your constraints, but you have to figure out what that goal is and then allocate resources appropriately.
Excellent. Thanks, Jonathan. Kaylee, I'd love to get your thoughts.
I fundamentally think that you should be optimizing and being thoughtful about where you put your resources, where you put your bets, even when your resources aren't limited. Because going back to when we raised that first round, $2 million in the bank, you feel like you are on top of the world, you can spend on anything, and you should experiment on everything. And my perspective is that shouldn't be the approach. I think one of my biggest challenges as a founder is balancing being super focused with also at what point do you have a little bit of shiny object syndrome and chase, potential leads. And I think you really have to have a fine balance as a founder. When I think about kind of like that signaling to unlock growth. I really agree with what Jonathan says, is like, what are you trying to really optimize for? In our circumstances, it's revenue growth. And so for me, like the customer is always that signal for us. And that was, I'm just like flagging all the things I did wrong apparently, but that was another area that I wish I would have kind of pivoted in myself as a leader, is I was not talking to enough customers early on enough. The reason why is I was so focused on building product-led platform that I couldn't see the forest through the trees, or, you know, the trees through the forest. I was so focused on building this product-led platform that I was thinking about building a tech platform and a solution versus talking to the customers, and realizing that there's actually a really big sales-led motion here. And the minute we kind of repositioned the Blanka business as like a sales-led org, it was a massive unlock. And so I really do think that that was a really big learning for us. Today, I spend about 80% of my time on sales, and this might be a more extreme perspective, but as a founder, I think that you should be running sales in your organization early stage. So that's kind of how I think about like the signals for growth, is really it's coming from your customers, at least at the stage we're at. And for us, it's like always thinking about resourcing as like a constrained thing that you have to figure out, and not trying to over index on too many experiments at once, because I think it's easy to lose focus.
That's excellent. Thank you, Kaylee. Don, I'd love to get your perspective on those signals that help unlock growth opportunities, and where you decide to place your bets. And I'm sure there's some topics have already come up that you might want to double click on as well.
Yeah, no, this is a great question. Safe historically was focused on the spatial arena, so cities, utilities, anybody who had any data that was about the location on the ground. And then now we're going after the entire enterprise, right? Because we're in a lot of organized companies, how do we expand? And so I remember we had an old brand. I remember saying to my chief marketing officer, okay, I want to go after the enterprise. And she just looked at me and said, you can't. And so I said, well, why can't we? And she said, well, we can't go after, C-suite and these large organizations when your brand is full of lizards and robots and all these things that the technology people love. Then our ICP was also something that we learned. What is ICP? Was we didn't really worry about it because we only ever talked to one type of person, which was the technical person. We were technical. And so we naturally had this connection and we understood their problems and we could grow the business that way. Well, those conversations when you're talking to middle management or you're talking to the C-suite are completely different. And so we, spent, a bomb just rebranding the entire company from stem to stern, making sure the message resonated at the enterprise level without losing the people we traditionally talk to. And that was and I'll say, no matter how much money you have in the bank, Safe's always been profitable. You always have to be, just going back to what Kaylee said, you always have to be really disciplined on where you're going to actually spend it, because there's always more you can do. And if you're not careful, you can end up spending more than that you can't sustain. So that was the other thing. And AI, and we'll talk about AI later, but that was like a gift from heaven in some sense. And then MCP came along from Anthropic, and because we're like Launchpad, we work to bring data to organizations and tools. And what does AI need? Data. You can't talk about one without talking about the other. But so
that's great. Thank you. And yeah, certainly AI is completely changing the landscape for tech leaders, and both externally in terms of your products and then internally within your businesses. So let's dive a bit deeper into that topic. I'll come to you first on this one, Jonathan. I just love to hear from you. Kind of what does that look like in your world? And how are you and your leadership team managing the pace of change and how AI is transforming within your space?
Yeah, this is the topic of discussion at the moment. I would say, the shift is so interesting because it forces an organization to evaluate its growth mindset. And what I mean by that is, like, it kind of forces everyone to become students again in something that is incredibly high leverage, but that not anyone is a super expert in, or at least everyone is still on that learning curve. And so we are trying to do a lot of things to, publicly encourage everyone to experiment with it. We're doing a lot of public learning sessions. We're trying to make it fun. We recently ran an AI competition just to see who could put together like the coolest workflow enhancement using AI and how they use it, because seeing what other people are building is really important in trying to contextualize how something will work for you. And so we're trying to make it collaborative. We're trying to make it public. And I think one thing that's true is that the leverage is real. How you use the leverage is going to be determined by different companies. And for us, we're thinking about using the leverage of AI to accelerate our growth, not necessarily reduce the amount of resources that we're using. And it's, yeah, like Don said, a huge gift in that regard. And maybe the last thing I would say is there's two things that are true about AI right now. One of them is the benefits that it offers at the moment, but then two is the potential that it can bring. And for people who are on the sidelines waiting for that potential to manifest itself in a way that they think is true, they may be behind the learning curve. And so one of like the real ROI things to assess in evaluating AI and looking at AI is, are you becoming familiar with it? Do you understand where it's good and where it's not good, so that as it becomes better, you know exactly how to leverage it? And so we're full in on the AI bandwagon at the moment, and it's really cool to see what it can do.
That's excellent. Some excellent points there, Jonathan. Kaylee, would love to get your perspective on this.
Yeah, so we are very, very bullish on AI internally. We operate a lean team, we always have, and we're operating pretty much the same size team, maybe a bit smaller just from team changes. And we're doing significantly more in just like work output, but also revenue as compared to a year ago. And I can directly attribute that to AI. I will point to two more tactical examples. I feel like when I'm on webinars, I just want people to give me an example of what they're doing. All of our growth is organic inbound, largely through SEO. February of last year, our traffic plummeted because of those AI snippets on Google. And so leading up to that, though, our strategy was really like a lot of blog creation. We grew a massive email list, so a ton of email content, a lot of social partnerships, backlink exchanges, all of that really drove our traffic. But we had a team of marketers doing that at Blanka. And then we also had an SEO agency, and then we had like an ads agency. Well, we completely shifted the way that we're thinking about marketing about a quarter ago, and we onboarded an AI content agency, and it's been insane. Like the level of reporting I'm getting is better than anything I would have gotten before. We're getting crazy amounts of backlinks. We're doing a blog a day almost. We can't push too much volume yet because Google's not used to that, and we don't want to hurt our rankings. It's also pushing out all of our email for us, and we're also going to start automating all of our social. And so that's one example of something that really impacts our business because organic growth is so critical to us. On the dev side of things, we are building probably 4 to 5 times faster than we were before. I think one of the caveats is that if your dev team is using Cowork or any of those tools, you really do need a senior dev team to make sure it's not going off the rails. And I think that's one thing, like I'm less bullish on vibe coding in a lot of ways. Like I have some personal opinions there. Like you need a really senior team to make sure they know what's actually going on and you're not building like a popsicle stick app. I think like broadly speaking, when I think about my team leveraging AI, our biggest limitation is really just your imagination and trying to think of like how to take your current workflows and getting AI to do that. And I think we're really trying to encourage our team to think differently, but that's been some of the bigger hurdles.
Thanks, Kaylee. I appreciate the examples. And I know that the SEO to AEO journey has been real. It was the topic of our recent CMO council. They spent their last meeting speaking about that in detail. So appreciate you sharing some of your strategies and what's working for you. Bruce, let's come back to you. I appreciate you kind of give us some context into how it's changed in terms of the customers, came to you and kind of gave you that opportunity to go deeper into the AI space, but would love to get more perspective for you on how it's shaping your business and your internal team.
Absolutely. So we spoke about the customer side of it. I think on the internal side of it, there are two major shifts for us. One is what Kaylee mentioned, marketing. We have really leaned down our team. there's a way higher output and productivity given the current tools that's available through AI. We haven't leveraged the agency yet, so I'd love to ping you, Kaylee, actually get your thoughts on that. Internally, for instance, we used to have one or two actual writers, content writers, and that has really reduced down. Graphic designs and etc. So that has really leaned out the team. So higher productivity, higher output, lower resources required. But on the development side, we are a software company. This is where it really got interesting, and there's a couple of really light bulb moments for me as a non-technical leader in the company. Um, so our software development lifecycle, SDLC, for releasing product is very stringent. They're production grade, enterprise grade products that goes into very critical, mission critical operations for our customers. So when vibe coding became really the buzzword, we really kind of double clicked on that as a organization. Our internal non-client facing or product release teams for internal use for certain things, for instance, our sales team, came up with some great ideas, some vibe coded systems that internally can really increase their output from sales and outreach, SB, outbound cold calls and emails. Those were awesome. But for our product team, they started leveraging AI. I've seen probably not 3, 4 times, Kaylee, your group, the multiplier effect. I've seen probably about 40 to 60% increase in productivity. Reason being that we still are holding a very, very, very strong quality control in terms of what codes gets to be production code, because we can't have a vibe coded system where you really don't know where the underlying source code and foundations and logic lies, and have that go out to our customer. And literally, that is not okay. But in terms of actually increasing the output from a developer's perspective, we have more focused on what can we do in terms of reducing the initial coding and having some of the low-level coding frameworks established. And also another learning for me from a manager's perspective is that we have obviously, probably like most organizations, formed the AI steering committee internally to review on a monthly basis what we are doing, what the market is doing, and how do we adapt, and what can we do better. I'm probably guilty of the seagull management, and I've at 8 o'clock after my kids go to bed, looking up the latest AI news, and oh hey, there's this new product that came out of Austin, Texas, or came out of the Valley or somewhere that has lower cost per token transaction, faster faster processing time, etc. And I'm dropping these into our steering committee Slack channel internally. And after a while, the team basically came back and said to me, listen, great, we like your input, but you have to also understand, we have chosen a path of the tools, AI tools, for our development, and we have trained the large the language models. We have trained all of the things that is specific to our product. And if we change it every month to a different platform for for AI coding, we're gonna lose all the training that we have done into the language model. So that was a light bulb moment for me, because sure enough, a month later, the tool that we are using, our team is using, has caught up. Cost per token has also come. So we have to recognize out there in the market that we are in a stage where the market is competing with itself, and as long as you're choosing a strong product that's competitive, your team is using, probably the safest and the most wise decisions to stick with that, but monitor that closely. So yeah, very interesting times we're in.
That's excellent. Thanks for sharing that, Bruce. Don, I'd love to get your perspective here.
Yeah, at Safe, we think AI is existential. As I talk with companies, there's some that are on the sidelines or kind of with the wait and see, and we're definitely not that. We have a steering committee. Also, everybody at Safe, I've made the point many times that Billy Bob cannot compete with Billy Bob who's using AI. And I've stated people, you will not lose your job if you're using AI, but you might be replaced if you're not, right? And which is pretty bold, but we're a team, so we help everybody embrace AI. And it's really interesting to see who are the people who embrace AI. It has very little to do with their intellect, like we have geniuses who use AI, we have geniuses who are slow on the AI adoption, we have order taker people who are really on the AI bandwagon and others who aren't. So it's been really, quite a journey. Some developers, of course, are pleased with how it's gone. For sure, development has changed forever. They spend a lot of time reviewing code, not so much writing code. But when I look at how I produce documents, I mean, I'm telling AI what I want, then it gives it, then I correct it, and so it's a much more assistant kind of based, effort. Whereas before, I might give something to a person to write up, and then I preview. Now it's AI, and it comes back really quickly. On the product side, it's made some significant improvements for us. I mean, there's some things like security scanning is completely improved now with AI tools out there. You can do that. Um, Testing is great as well. You can use AI to automate some tests, generate tests, and you can save great amounts of time there. And then, just in general, the whole QA mandate of how we run and build product is completely different. We do switch tools from time to time, but as Bruce said, you have to really watch that. I think now we're mostly on Claude Code and maybe one other. I mean, my journey, I was on OpenAI, then ended up in Gemini. Now I'm on Claude Cowork and Claude Code. I even write code now again. None of it's made it into production, but it's great for prototyping things and just getting things that are that are internal. But yeah, you can't ignore it.
Yeah, that's excellent. Thanks, Don. I'm keeping an eye on time. I'll go to my next question. Maybe we'll just do a quick round on this one, and then we'll go to the audience questions because I have a few in the chat. But to Kaylee's point, I like getting any kind of tips or stories or strategies we can out of our panel. So this next question I had was around efficient growth and what that looks like day to day in your businesses and as you scale. So I thought I'd just come around and ask each of you, are there any tips or stories or strategies that you've used at your business that helped you navigate efficient growth? Like what was a secret sauce for you or something that worked well or you found worked well? So I'll just come around, give you each maybe a minute or so. And Jonathan, I'll come to you first on this one.
Okay, really quickly, I do want to give a framework for this one, which is that with efficiency and with growth, they operate on a spectrum. And so if you're ultimately efficient by nature, you don't have a lot of slack in the system, you can't really be agile. If you're maximally geared towards growth, you're going to have some inefficiency in the system. You can think of this like driving a car. If you put the pedal to the metal, you're going to use a lot more gas than if you just coast, but you're going to get there a lot faster. And so I think the question with resource allocation and efficiency is, are you trying to be efficient or are you trying to go fast? And one way that we think about this at Hiive, and it's always the marketing team. The marketing team is always coming asking for more money. I'm sure it's similar in most other companies, but we look at ROI of spend. And so if someone wants to go and spend $1 in ads, can we prove, do we have data to support that we're going to get $1 return in revenue eventually? And there may be a deferred return. It may be sooner than later. We may run some tests on whether there's going to be a return at all. But when you're thinking about efficiently growing, you want to think about what is the efficiency of $1 of spend and how are you tracking it and how do you make sure that you're reporting on it and holding people accountable to it, because spend decisions compound over time. The more inefficient spend decisions you make early, the harder it is to turn them around later. And so it's better to make sure that while you're growing, you're building some efficiency into the system. And thinking about the ROI of $1 is a really effective way to do that.
That's excellent. Thank you, Jonathan. Don, I'll get your thoughts.
Yeah, I would say at each phase as you grow, look for people who have done that before, grown that, So we start off very small. and the people we could attract were very different. And then, now we just gone through 100 million. We're going for, much more than that. So finding people who have done that before is really, because then you don't have to make all the mistakes and learn all the lessons yourself. You're still going to make mistakes, but you can leverage their expertise and their experience. So yeah.
That's excellent. Thank you, Don. Bruce, do you have some thoughts here on tips or strategies that help you with efficient growth?
Yes. Efficiency and growth. I do like what Jonathan said there. It really resonates. I think one of the biggest things from a leadership perspective and your balance in the middle of a balance is being able to say no. I think it's a very powerful, at its phase is kind of sounds kind of mean, but at the core of it is really being true to what you're trying to achieve. What is the end goal here? Are you trying to, back to the poll in the beginning of this session here? I think a lot of the audience here and the companies are focused on profitability and revenue. So does that mean that you want to get there faster, growth on your top line revenue, or are you focused on your profitability, which is more of an efficiency topic, right? So I think it really depends on where you're at. From Launchpad's perspective, we are focused on profitability and growth at the same time. So that trade-off really becomes where my marketing team is coming in to ask for more funding. So is my sales team. Saying no first to really kind of stop everybody to think about our priority. What is that we're trying to achieve is a really, really key thing. I think people will pause and really kind of double think that, hey, am I doing the right thing here to achieve the overall company goal, or is that just something that I need to do to get done for this quarter? So yeah, being able to say no.
That's great. Thanks, Bruce. And Kaylee, you have a lean team, as you said. So how do you think about kind of those decisions, and do you have any tips for our audience?
Yeah, I think in terms of like efficient growth, going back to this whole webinar, it's about, how you fund your growth. And in our cases, it came from investment. When you get investment, there's so much focus on revenue. I think one of the things I would really suggest and advise, and I wish I could tell myself this sooner, is, it's not just about efficiency on revenue, but it's actually efficiency on your costs, right? Thinking about your margin. I actually wish I obsessed about margin a lot more, because had we done that sooner, we would be even more capital efficient. I'll give you an example. Is we are obsessed with our cost of goods sold right now, because we have a physical element to our business. And we're making a small pricing change to shipping tonight at 6:30. And we're not trying to get to break even, but we'll get to break even this year just by this small tweak. And these are just things that we weren't looking at as a business, because we were getting so much pressure to grow on revenue. And I think that we missed half the puzzle a little bit. And so I would love to, really push other founders, especially, I think at any stage, but definitely at the stage we're at, is to focus on that. And it doesn't mean that like every dollar from every customer is worth your time. We're starting to realize certain customers we don't need. And yes, our revenue might drop a little bit, but our dollar's going to go way further because they don't cost us as much to service. And so I think that's been a really big learning for us in the last year.
That's great. Thanks, Kaylee. And I'm going to stay with you for a second, because we have a question from the audience for you, kind of following up on your earlier comment about connecting with your customers. So our audience member is asking, how do you overcome the challenge of not speaking to customers enough in the early stages? So are there any specific things that you did or you'd suggest for other founders?
Yeah. So for us, the biggest challenge is because our company was product led. They would sign up, they'd onboard, they'd start using Blanka. They didn't really want me to call them randomly and ask them how it's going. Like, a lot of clients found that frankly disruptive to their day. And when I would make those calls, like, people were like, just call your customers outright. Like, they don't really want to talk to you. There is something to be said about calling the customers that cancel and really understanding what's going on there. But keeping that aside, one thing we did is we put this like unique button on our website. Basically, we tested out this wholesale offering for our brands, and we put a button on our website that immediately let them book into my calendar on HubSpot. And it was like revolutionary. Not only did this button get crazy amounts of traffic that we didn't expect, and validated a new service line for us. But then I got to talk to like 10 customers a day. It was really, really impactful. Honestly, that as well as like, I love HubSpot. This is a personal preference. And we've have so much software diversification. Like we're using customer.io for our emails, Intercom for our chat, HubSpot for sales. We're trying to unify all that customer data right now. And I think had we done that sooner, we'd be able to drive more revenue. So that's kind of like there's a few pieces in there, but that's how I was able to get on way more customer calls.
Anyone else from the panel want to share their perspective or anything they've done internally on that one? I've got other questions, so I can go to those.
Relationship with the customer. I think, since COVID, folks are so used to getting on a video call, even if you're in the same city. I think the good old fashioned in person sitting down across a table never replaces the video call. Get out there, shake a hand, share a glass of beverage.
Yeah, just to like top up on that really quickly is like I was in New York and invited one of my biggest clients to come meet me at a conference, and I have no boundaries. So I was like, here's my phone number, text me when you arrive. And now we text back and forth, and like he's committing to a bunch of reorders with us now. And he like literally is telling me his dating woes. And so that relationship, Bruce, that you're talking about has been so monumental for us. And like has been a big learning now that I'm in sales.
That's great. I'm going to try and get to one more question quickly, which is just around, we've touched on AI. We had a question from David about how AI is influencing your decisions from a hiring perspective and skills development internally. And I know a few folks have chatted about this. Don, do you mind if I come to you on this one around the AI skills development internally? Is there anything you'd share with folks that you're doing at SAFE?
Yeah, sure. We have something called AI champions, and there's one on every team. And then each team will have meetings where one member of the team will share what they've done, and they share it with the rest of the team. During my call to action, I always have somebody come up to share with the company what they've done, and I've stayed away from product because everybody expects the guys on product are going to be the ones to show AI, and so I have not yet showed anybody on product how to do that, and it's really resonated. And then and later in May, I have a new AI director who's going to start, and his whole mandate will be to empower each team, right? So his first 30 days are to just learn and listen and assess, and then after that, we will be sitting with teams, showing them how to use the tools, because often we have really smart people, really engaged people, but sometimes they just don't know how to use the tool. And once you show them how to do it once, they're off to the races. That's the great thing about AI is once they see it, once they get it, and all the toil that they're dealing with, and they get to spend more time in the creative space, which really everybody gets excited about. So yeah. And then my plan is once he's settled in, I always make sure I have the right leader first before I hire around them. Then I would get an AI enablement person for each team whose goal would then to be to train and really look for ways to push people to get more value from AI. Yeah,
it's fantastic. Well, I wish we actually had more time, but I'll stop there. I have a final question myself for the panel, just quickly. I know we have a lot of startups who've joined us for today's call, who have big ambitions and are just starting out. So I'd love to hear just briefly from each of you, kind of what key takeaways you might share with them as we close up today's session. And Kaylee, I'm going to come over to you first.
Okay, I think I already really kind of double clicked on mine, but I'd say, selling as a founder, being disciplined with capital and protecting your runway, and probably building for really strong margins from the get-go.
That's fantastic. Thank you. Bruce.
Stay true to your original founding principles. I think along the way, there's all kinds of pressures. Either you have taken capital or you have taken risk. There's going to be moments where you're going to face all kinds of pressures every month. But always remember why you started, and staying true to that will always be a great guiding light.
It's fantastic. Thank you, Bruce. Jonathan, your thoughts?
I would just say, ask yourself if you're optimizing for efficiency or for growth. and whether your capital plans and your growth strategy align with the decisions you're making with respect to that. And I would say not every dollar goes as far as another one. And so as you're balancing this growth perspective with this efficiency perspective, know that execution is also incredibly important. There's some problems that money can solve, but not every problem money can solve if it's not well executed. And so look to be efficient with the dollars you're spending towards the goals that you have.
Excellent advice. Thank you. Don, you get the closing word.
Awesome. I would say look after all the stakeholders, not just the investors. Look after your stakeholders, your customers, the team that's building it, and be a good capitalist and share with the community around you. SAFE was built on this notion that do good while you're doing good. It's terrible English, but I think you know what I'm saying. And because at the end of the day, nobody can take that away. And then you work on those three, then the investor part, this kind of takes care of itself. But all we hear about today are how much money the investors are doing and how everybody else is taking it on the chin. And it doesn't have to be that way.